Well, Nvidia has released their 10Q, which contains financial disclosures that we weren't told about when Nvidia first reported earnings. And it's leading to some skittishness in markets. This morning, the NASDAQ was up 2%. We were trending towards 617 and plunged. We are now, as I'm recording this, down a full 2 percentage points, and we're about to turn negative on the day. On top of that, Nvidia, that was knocking on the door of 200, is now also rotating down, and AMD even lost 232. So what's going on? What was in these disclosures that got everybody a little nervous? Well, we're going to break down exactly what we saw, and I have to say some of it was shocking. Now, I want to be crystal clear about this. The way these companies do earnings is they release a press statement and CFO commentary and their overall earnings numbers. You don't get any details, really. You get some details, but you get like a little 2-pager, right? Then they do their earnings call. And then they release their press statement, which includes a little bit more detail. And then a few hours later, when everybody's going cheersing and drinking beer to the beat, then they drop the SEC filing called the 10Q. Now, the SEC filing contains some of the juice, and it's interesting juice. So first, one of the complaints that I've regularly seen about Nvidia since earnings yesterday was that, but Kevin, inventory is up 90% on Nvidia from their comparison quarter in January. So comparing back 9 months ago, inventory's up 90%. And I'm like, well, Jensen did address that. So my first rebut to that is Jensen addressed that. He said that they don't want to be supply constrained like they were with the original Blackwell launch, where they had so much demand and they couldn't actually get the short-term products that they needed, the components, the raw materials, and the materials that go into the supply chain to actually give them the chips they needed. So Jensen argued, hey, we're just building up the components we need for the chips. That's all. And I'm like, all right. I mean, like, I'm not going to call Jensen a liar. I'm like, all right. So then today, I'm like, hey, boys and girls, the 10Q is out. And the cool thing about the 10Q is it actually tells you the breakdown. So we did this live. We're like, hey, maybe we could find the breakdown inside the 10Q. And boy, oh boy, did we find it. And boy, oh boy, is it not exactly what we expected. Look at this. Certain balance sheet components as followed: raw materials, work in progress, and finished goods. Folks, raw materials from January rose 23%. So they have 23% more raw materials in October than they did in January. But finished goods, which basically means ready to sell assets, doubled from 3.2 billion to 6.8. Now, maybe that's okay. Maybe that's just because they're selling more. But if they're quote unquote sold out, why are finished good inventories rising? And why didn't you explain that? You only told us that, oh, well, we just want more inventory because, we need the components. But your raw material stuff only went up 23%. And this is a little sus. Your prepaid supply and capacity arrangements right here declined. Look at that. So the prepaid supply that you're hiring, TSM and these other companies for declined from 1.7 billion to 1.5 billion. That's a 12% decline. Now, maybe there's an explanation for this, but it's odd. Work in progress did go up by 156%. That's fair. Maybe we could argue that's the issue, but raw materials are only up 23% and finished goods doubling. You kind of left that part out, Mr. Jensen. We didn't really like that. That was a little
poopy doopy.
You kind of came to us and said, guys, guess what? We're doing so well. We're just building up our inventory so we have more stuff so we can print more because, we're sold out. It's great. Yay. That's what we were told. But the reality is That was a half-truth, buddy. That was a half-truth. Okay, all right. So it's not a complete lie. It's a half lie. Then we look at, okay, well, what are they up to with their investments? Because we know that they just partnered with Microsoft on a $15 billion deal. So they partner with Microsoft on a $15 billion deal. And the way this is going to work is Microsoft and Nvidia are going to together invest in Anthropic. And then Anthropic is going to turn around and spend $30 billion on Microsoft Azure contracts that are going to be based on Nvidia chips. You see what I'm doing with my hand here? The giant circle? We're going to give you money so you can pay us. Got it. Okay. Now, who's paying more of that? Microsoft or Nvidia? Well, it turns out they disclosed it. Microsoft didn't. They actually disclosed it. Take a look at this. Commitments and contingencies. In November, we entered into an agreement to invest up to $10 billion into Anthropic. So in my opinion, that means that Microsoft is doing $5 billion and Anthropic is doing $15 billion. Interesting. So Nvidia is having to do more of the investing and the heavy lifting than Microsoft is doing. On top of that, they guaranteed, we believe this is CoreWeave, they guaranteed one of their partners, I'll just read this to you. In the third quarter, we entered an agreement to guarantee a partner's facility lease obligations in the event of their default. That agreement allowed them to secure, their financing and their data center or whatever backed by our credit profile. Now, CoreWeave, we think it's CoreWeave, put $470 million into an escrow. So basically, hey, can I use your credit score and I'll give you some of the money in cash, but I really want to build this data center, but I can't get the financing unless you help guarantee me. Okay, weird, but whatever, it's happening. On top of that, we have Nvidia's full set of cloud spending commitments now, which have doubled since the last time they disclosed this. Take a look at this. This is Nvidia's cloud spending plan. And they do this so that way these data centers can build out their data centers and have a guaranteed customer. But look at this. Nvidia says we're going to spend $1 billion in 26, $6 billion in 27, $6 billion in 28, $5 billion in 29, $4 billion in 2030, $4 billion in 2031. According to the information, which this is in the 10Q we just looked at, according to the information, that would make Nvidia one of the largest cloud customers. But wait a minute. If there's so much demand for the cloud, why is the very company that's building the chips to support the cloud becoming the largest customer for the chips? And so this is where I made the joke. You'd see it here. That would make Nvidia one of the world's largest cloud spenders and users of GPUs. That made me sort of think like, man, maybe Tesla should do this too, because obviously you could pump your stock by doing this. So maybe Tesla should make cyber cabs and then sell them to someone else so they could say they've delivered another car and they could recognize the revenue growth, and then they could rent back their own cyber cab, over the next 6 years in their robotaxi network. Now they get the best of both. They pump their sales today because somebody else bought it, and they pump their robotaxi revenue. Now, normally what a company does is you make a chip that you might need and you just use it. Like, you don't sell it and then borrow it back, because that's the accounting magic that's making people nervous. Now, don't get me wrong. Not all of the bears, I think, are, fully genuine here, or like fully like reasonable. Like, for example, there's this guy, I guess the Coastal Journal, and he's got this giant Substack dumping on Nvidia. And I'm like, oh, this guy must be short. But the irony of it is, I went to his Substack and I did a Command F for the M dash. The guy literally had 29 M dashes in one article, which is a telltale sign that he's using ChatGPT to write the whole damn article bagging on AI. So I don't think all of the bears are genuine here. Maybe remove all 29 of the M dashes. But anyway, another thing that I thought was sus. So I looked at their accounts receivable breakdown. And you can actually see this under the notes. It's called the under the balance sheet components section. And I wrote this down so you could see it a little bit more visually because the way they put it in the 10Q isn't really obvious. But this was also concerning about Nvidia. Watch this. So on accounts receivable, on January 26th, customer number 1 accounted for 17% of accounts receivables, and customer number 2 accounted for 16% of accounts receivables. Okay. Well, we know accounts receivables are up like $10 billion from January. But then I look at this. The big customers, customer number 1, 2, 3, and 4, all of them are now accounting for big portions of the receivables. So the biggest customers are now not paying. That's odd. Now, yesterday, in fairness, when I only saw the press statement, I'm like, well, I mean, their revenues are like up a double year over year. Like, of course, accounts receivables are going to go up. But it's odd to me that it's not everyone who is seeing their accounts receivable going up. It's actually some of the largest customers, which these are probably CoreWeave, Microsoft, I don't know, whatever. The other, Oracle, that's the one I was looking for. Oracle, right? So the biggest customers are slowing down their payments. Interesting. Somebody says, Jensen only said he was sold out of cloud chips, not Blackwell. Interesting way to put it. Interesting. Okay, so now what we have is, let's see here. All of this comes at the same time as you're getting people getting really sussed out about OpenAI. Because OpenAI is seen as this company that is basically making all of these commitments to spend money. Like right here. Since it launched, OpenAI has been the one to beat. Nvidia and Microsoft are investing $15 billion into Anthropic, which in turn will spend $30 billion on Azure and Nvidia chips. OpenAI is doing the same thing, which led the stock market to fall, or at least Microsoft fell after the announcement. They say here that, OpenAI is going to spend $300 billion over the next 5 years in compute power from Oracle, but Nvidia is going to invest $100 billion into OpenAI, and, Oracle is buying Nvidia chips. So it's all a giant circle, right? But I thought this was an interesting statement over here. In the Economist article, actually can't see exactly where the statement was, but where was the statement about them being credit? There. That marked the start of 1.4 trillion of spending commitments by OpenAI, which raised fears in financial markets of a binge by uncredit-worthy borrowers to finance new AI data centers. Yeah. That is what you're seeing. So it's not just the Economist now talking about cracks appearing in OpenAI, but you literally have the Financial Times questioning who is the auditor for OpenAI. And all they could find was this financial filing right here from 2023. And this financial filing was put together by an accounting firm right here in San Francisco called Fontello, Dunfield, and Otake Limited Partners. And if you go to their website, here it is. Hold on. Let me get myself out of the way so you could see the full website. Here it is. Here, let me go to full screen so you can really take it all in. There it is. Yeah. So that now has people going, who the hell audits OpenAI? Now, OpenAI, in fairness, is a private company, and they don't have to disclose their auditor. In the United Kingdom, they're supposedly audited by Deloitte. But here's the problem regarding the big auditors. You ready for this? This is crazy as well. Ernst & Young, one of the big four, and KPMG, the other big four, sell products that use Microsoft Azure OpenAI tools. Deloitte definitely uses OpenAI internally, and PwC sells OpenAI products. So, in other words, Deloitte is using OpenAI products, and they might be the auditor for OpenAI, or these people are doing, accounting audits for them. We don't know. It's a private company, so we don't know. So the Financial Times is like, hey, if it's a big four, they might be a little conflicted because they literally either sell or use OpenAI. And if it's not a big four and it's this guy, well, then that might be another problem too. Hashtag just saying. So it's weird. And all of this comes out in the 10Q after all of the fanfare, which is also annoying. Okay, now what else? Well, basically, when we put this together, Jensen tells us, oh, don't worry, inventory's going up because, we're sold out and we're just trying to make sure we have enough in the pipeline. Really, because your finished product inventory doubled. That's sus, okay? That's weird. You told us a half-truth. You're having to guarantee CoreWeave so they don't go bankrupt so they can keep the debt cycle going. Private credit markets are funky, and at the same time, your prepaid supply and capacity agreements are declining by 12%. It's just odd. It's odd. And if we go back to the days of history, if we go back to Cisco actually beat earnings over and over and over again going into the dot-com bubble. And guess what? The dot-com bubble didn't burst because Cisco missed earnings. They actually were beating earnings. The dot-com bubble burst in spite of Cisco beating earnings. People just got sick and tired of what was going on and the valuations of what people were paying. And look at this. As I get to the end of this segment, AMD now down 420. The Q's literally at 595. Holy smokes. In my alpha report this morning, I'll pull up the PDF version because I don't think people will believe it. But in my alpha report, I'll give you the preview that I gave. Oh, well, this will work. This was a segment of our alpha report today. I said that best case today is we slowly get to 617. That would be bullish through December 8th. However, I said the Qs need to hold 107 and we we need, I literally in caps put it, we need to hold 232 on AMD and we need to break 200 in Nvidia. Otherwise, if we lose those two, if we lose 232 on AMD and we lose 200 on Nvidia, we could risk losing 607. If we lose 607, we trend back to 595. I kid you not, that is my alpha report this morning. And look at the damn Qs. Trying to get to 617, but what happens? We can't hold 232 on AMD. We can't hold even close to 200 or 198 here on Nvidia. And so what happens? We plummet. And as soon as we lose 607, straight back down to 595. In the alpha report, signed, sealed, and delivered to you before the market opened. Crazy. Anyway, this is wild. And I don't know what to say, but it is wild. And I appreciate all of you who joined in the alpha report before that coupon code expired. Yeah, there you have it.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.